Hello everybody. Welcome to TCOM 101. Hey, you guys pay close attention to this little video. In this video, I'm going to give you some information that you are going to need for an upcoming assignment where you create an in-depth profile of some TCOM related company. That's a big upcoming assignment. So you'll need to know the major concepts and then later some of the major information sources that you'll be using to create your company profile. Now, why do I want you to profile a company? What's the rationale for this assignment? Well, you will learn a lot about the TCOM industries, how the companies are organized and the products and services that they provide and some of the critical issues they may be facing. Here's another very practical reason. Here's an information graphic. Most common mistakes candidates make during job interviews. Number one mistake, little knowledge of the company. So it's an important skill to know how to background and to understand a company and its economics. So we'll be talking about some economic concepts and some statistics in the course of this video. It's important that you understand these concepts. So many of the concepts we'll be talking about relate to Wall Street and the stock markets. And all of the companies that are eligible for this assignment have one thing in common. They all can be bought and sold on one of the major stock exchanges. All right, so you will need to understand this concept, stock. Stock is ownership of a piece of the company. And it's how the company raises money. It's the capital or fund that a corporation raises by selling shares of the company. And if you own a share, you're entitled to things like a dividend, a share of the profits, or the right to vote at the annual shareholders meeting. But many, many Americans own stock, okay? And this includes anybody who has a 401k. All right, now we used to have paper stock certificates that were beautiful, but these no longer exist. Everything today, of course, is done electronically and digitally. Now, stocks are bought and sold or traded on something called a stock market. It's an organized market established to facilitate the buying and selling of stocks. In the United States, there are two major stock exchanges. They are the older one, the New York Stock Exchange, and the younger one, the NASDAQ. You'll have to find out where your company is being traded, on which exchange. Now, the way we track stocks is using something called a ticker symbol, a little code. This is a little combination of letters that identifies a security that's traded on the stock markets. So it's often the truncated or abbreviated name of the company or the group that's issuing the stock or the security. So here's some of the common ones in the TCOM world. Walt Disney is DIS, Apple is AAPL. You can see some of the others on this list. Okay, Microsoft is MSFT, and AT&T has a single letter, T, for its ticker symbol. All right. The stock ticker enables us to rapidly track what we're really interested in, and that's the price of the stock. The value or the price of the stock is constantly changing through the business day. So when we talk about stock price, we're talking about the current, or at least the recent closing price of one single share of a company's stock. Some of these stocks can be very expensive to own. Some you can get for pennies. Now, how do we look at the performance of stock over time? Well, we have to consult a stock chart. That's a simple line chart that shows the historical price movement of a particular stock. And of course, if you're an investor, you want to see a line that goes up over time. Look at the stock chart for Apple. Don't you wish you had invested in Apple in the 80s and the 90s, the 1990s? You could get it for just a couple of dollars a share, and now it's worth over $100 a share. This is the chart that investors want to see. It's not perfect, but it kind of resembles what's called the hockey stick, where there's kind of a exponential growth. Okay, so anyway, look at the stock chart for the company you're profiling. Now, when we talk about the economy, we usually talk about something called an index, which is a composite of many stocks, and it's just a way to indicate kind of on a daily basis how the economy is doing. So once you start following stocks, you'll run into these indices here in the United States: the Dow Jones Industrial Average, the NASDAQ Composite Index, the S&P 500 Index. I'll just explain these briefly because you'll hear about these a lot in the news. And as you profile your company, you'll run into these. So the Dow Jones Industrial Average, that's the most famous of all the indexes. It goes back to the 1890s. It tracks 30 large publicly owned blue chip companies, the big value companies that are traded here in the US. The Dow is really a proxy for the health of the broader US economy. Many times a TV journalist will refer to how the markets are doing today. They're almost always referencing the Dow Jones Index. Another index you'll hear a lot about is the NASDAQ Index, which includes almost all the stocks traded on the NASDAQ Stock Exchange. One thing to know about NASDAQ is this is the home of many of the high-tech stocks and the more recent companies. So it's typically considered an authority on how the tech industry is doing, how the NASDAQ index does on a daily basis. And then a final index that you'll run across all the time is the S&P 500. This is an index that measures the performance of about 500 large companies that are traded here in the United States. But it's also one of the most commonly followed of these equity or stock indices. All right, I know this is a lot about capitalism and the stock market, but this is the heart of the American economy, what America is based upon, capitalism. Now, another important term is called market capitalization. This is really refers to the overall value of the company, at least on paper. It's a very interesting economic metric. This is based on the stock price, so it's constantly changing, just as the stock price is constantly changing. Okay, the market capitalization is the total dollar value of all the outstanding shares of stock. So you compute this by multiplying the current stock price times all of the shares of stock. And this is a measure of corporate size, one of the key measures of corporate size. So the value of all of the current shares of stock is really the market capitalization. Now, we've seen some incredible things happen here with the tech companies. For example, Apple. Apple, a couple of years ago, 2018, became the world's first company to pass this important threshold of $1 trillion market capitalization, worth $1 trillion. This was big news. Only a handful of companies have ever done this, and Apple was the very first company to hit this huge market capitalization or market valuation. Now, this year, Apple became the first U.S. company to surpass the $2 trillion market cap level. This is unprecedented in the history of the world. To get an understanding of the size of Apple, it might be interesting to make a comparison between the value of Apple and the gross domestic product of countries. Gross domestic product, that's the sum total of all the goods and services and economic activity going on in a country in a year. All right? So the U.S. has the biggest gross domestic product in the world, $21 trillion. Apple has a market capitalization or valuation of $2 trillion. Only 6 or 7 countries in the world have a bigger gross domestic product than 2 trillion. Most of the companies in the world have a lower GDP than Apple is worth. Italy, South Korea, Russia are examples of countries where the total gross domestic product has a lower value than the value of one American company. So Apple has been an amazing, amazing economic success story in the 21st century. Okay, another important metric that I want you to know and to understand is called annual revenue. This is another way to measure the size of a corporation. The two main measures are the market cap or the annual revenue. Well, annual revenue, think of that as sales or income. That's all the money collected in 1 year by a company in a 12-month period. It's another important measure of corporate size. Now, there's a magazine called Fortune, which every year puts together a list called the Fortune 500. Okay, and this is based on annual revenue. Now, here are the top companies, especially the TCOM companies, in the Fortune 500 for 2020. The biggest company in the world in terms of revenue each year is Walmart, and it happens to be the nation's #1 employer, $524 billion of income every year. Okay, but many of the tech companies are among the biggest in America. Amazon pulls in $280 billion a year, Apple $260 billion, AT&T is #9 on the list at $181 billion, and Verizon is 20 at $131 billion. Here are a few more rankings from the Fortune 500 list. Microsoft comes in at 21 with $125 billion in annual revenue. Comcast is number 28, $108 billion. Facebook comes in at 46 with $700 billion. And the mouse, Walt Disney, is number 49 on the Fortune 500 list with an annual revenue of almost $70 billion. Okay, another important metric I want you to understand, and we'll be applying and using this knowledge, is a measure called profit margin. Very important. This is how much money the company is making in profit. It's a measure of the corporation's profitability. It's really calculated as net income divided by revenue. It's always expressed as a percentage, also known as return on revenue, but profit margin, very important, always easy to understand because it's always expressed as a percentage. If it's positive, the company's making money. If it's negative, the company's losing money. If it's zero, there's no profit or loss. Okay, and some of the media and tech companies have huge profit margins, up at 20 and 30%, giant profit margins among some of the tech and some of the media companies right now. All right, that's all I got for this lecture. A bunch of information on stocks and the stock market and market capitalization. Please understand all of these concepts because you're going to have to apply them later in the class. So take care of yourself and each other, and I hope to see you soon. So long, everybody.